Per usual, everything on this channel is for educational purposes only. It is not intended as financial advice. It is Setup Sunday. We have the Super Bowl today. Going to record a little bit early to head that off at the pass. I'll start with ETF flows just because, look, they're the only thing that really matter. They're provable, they're visible, they're fresh money coming into the ecosystem. I did an entire video on this yesterday. I'm not going to go into it too deeply here, but we had the highest inflows that we've had since day one, plus 541 million into the ecosystem. Flows are ramping up. Grayscale outflows are flat, negligible. We had a minor outflow out of BTCO. That was probably seed funding. This is what we want to see leading into halving. This is what we want to see with technicals being as bullish as they are. And people still, to me, seem to be in disbelief that we can keep going higher and or we won't be going back to 30 potentially. As far as the economic data for this week, the only thing that really matters is CPI. CPI should be down considerably on a month over month as well as year over year basis. The markets should like that. Risk markets should like that. Bitcoin should like that. Tech should like that. IWM should like that. It's good for everybody because I think it means that the Fed is closer rather than farther away from cutting because real rates will be too high. As far as some of this other stuff, there's PPI later in the week, but it's all about Tuesday morning. You know, if Tuesday morning comes and CPI prints anything above expectations, I think we melt down. If CPI comes well under expectations, I think that's when we see some sort of blow off top across the board. We could see Bitcoin to 50. We could see NVDA to 850. Like it could get wild on Tuesday because I think people are ready to party, even with prices where they're at now. It'll be interesting to look back on this video Tuesday at 9 a.m. and see if I was right. 9:30, I guess it would be. This is the Fed's own inflation predictions. So they've got January coming in at 2.94, 11 days into February here, and they've got that number at 2.86. PCE also coming down, core numbers coming down. So we continue to be headed in the right direction. Not purchasing power, prices are not going down, prices are just going up less fast. It's a terrible communication tool, I will admit, but this is the math, this is the data, and if we want to look at the real-time data from Trueflation that takes real-time housing data and plugs it into this along with everything else, you can go through this and look for yourself. That has us well under 2%. So there's still a lot of people who are talking about inflation expectations rising again or inflation rising again. Okay, I mean, we're not seeing that in the data. What I'm seeing in the data, in the real-time data, is inflation is trending downward, continues to trend downward. The day that flips, the day that goes higher, the day it goes above 2%, we will see it, we will know. So until then, I don't think it's entirely correct to just say like, oh, there's all this stuff going on globally, geopolitical risk, yada, yada, yada. It'll show up in the data and we look good. As far as crypto is concerned, let's get two things out of the way, funding and open interest. Funding throughout last quarter, October, November, December, ramped up considerably into ETF expectations. OI as well as funding got wiped out basically after those ETFs, after several false starts. Since then, funding has held on the higher side, right? Longs are paying to be long here, okay? So there's a timing component on top of being correct in the market, because if you're long like I am, you are eating funding. Your position is slowly getting chipped away. So if price starts to hold flat or it looks weak or it doesn't move higher and rolls over, if funding is extremely high, people are more likely to start to close their positions, and then that creates some sort of equilibrium eventually with price, right? Where price goes down to a certain degree, funding resets. As we sit here, funding to me isn't too problematic. It is definitely rising, right? You can see that, and it is on the high end. Predicted funding, nothing too crazy. So this isn't enough for me to close a position, but it's worth monitoring, right? If you're in a position for an extended period of time and we've moved from 43 to 48, yeah, this is worth monitoring. As far as open interest, I don't really know how to tackle this because we truly have a paradigm shift in a sense that ETFs are new. We have new entrants in the market. We have new products coming to market. We have new people trading CME. We have hedging going on in the CME like we probably haven't seen before. I'm not going to say that like, oh, this level isn't problematic. This level isn't quote unquote harvestable, as in This is extremely high on a relative basis in USD terms. Do we look at BTC terms? Is that more relevant, right? I don't know the right answer there. Is it elevated? Sure. Is it enough to get me to close a position in short or expect prices to go lower? This can't go higher, right? No, of course not. This can always go higher. If you are in a terrarium and the ecosystem is closed, right, and you're in a vacuum essentially, then you can observe the conditions. You can say, yes, historically at 1 billion in open interest, that's when we've culled the herd. That's when the longs have been removed in a big way, or the shorts or whoever else, right? To me, because we've seen so much change in what the ecosystem is here, it's hard to really know what our tolerable level is at the moment. But just historically, yes, we are elevated. Okay. Again, I don't think that's enough to be hyper concerned. If we turn on all the lines, turn on all the bells and whistles, the cloud, the moving averages, the VPVR, all of it. The good news is we've got levels to look out for, levels to watch. And one of the most uncomfortable things, if you think about NVDA or you think about anything in price discovery, is we have no support, no resistance essentially, right? It's basically straight up. You can always use projections. You can use fib extensions. You can use some stuff. But at least here we have levels, right? We can look at the yearly pivot. We can look at the near-term measured move of the high and the low, which is around 55 to 59. There's VPVR resistance at 57. So there's tons and tons of levels up here, right? On the top side, still to go before all-time highs. As far as support, we've got weekly cloud at 42, VPVR at 43. This should be a green line, but there's also VPVR support at 37. There's a weekly Tenkin at 37. 5200 weekly cross is bullish. There's support all the way down at the Kijun, right? So there's levels all over the place, all over this chart. We're currently at a level at 48 based on volume, but this is very much a ladder, right? If we find strength, 52 would be the immediate next level I'm watching. 50 obviously for psychological reasons, but 52.5 would be the mathematical R1. Not a lot of volume there historically, which would speak to potentially higher levels, but we will know when we see it. Do we just crush 50? Do we hold? Do we crush 48? We haven't. We're holding at 48. Okay, so that's the next thing to watch. But yes, there are levels all over this chart that you can watch on the way up, and we will probably take pit stops at should we move higher. We certainly lean heavily bullish. The question is that many people are wondering, are we too overbought, or they missed the move and they're completely out of position, right? Maybe they missed the move from 25 or 28. Maybe they still missed the move. I don't know. But there are a lot of people that I'm seeing that are still waiting to get in. If I was one of those people, I would be looking to 43. If we move to the daily time frame, we turn on all the bells and whistles again. Daily cloud looks great. We're above the daily. We held above the daily. We're above the 50. We're above the 200. We're above the 20-week moving average. We're above the 200-week moving average. All of those crossed way back here, which was also screaming along with the cloud. Get long, get long, get long at 28 plus. Okay. Now the next step here, as people are wondering, again, are we overbought? Is this too much too soon? We went straight up. This has to come down. I'm going to short this, right? I don't think that's necessarily the correct tact to take here. We could easily just range from 43 to 49 and keep going. I'm going to talk about a cup and handle possibility. Sure. We are overbought on the daily RSI, which I did a previous video on talking about oscillators. We love to live in overbought territory on Bitcoin because of the momentum, typically super strong. This isn't similar to the 28K break in a sense that we just held flat for a long time, but at the 28K break, once RSI tipped to overbought, we had a 60% move from there. Okay. We are not printing divs on this. We are still deciding what's going to happen up here. You can see as we got our three drives to the high, yes, we printed a continuous div. We also love to print these arcs in RSI. So we've just started to print a potential, right, arc. We're going to maybe spike up to 50, momentum's going to go to 80, and then, then we continue to go higher on maybe bearish divergence, right? That's one possibility. But I think it's way, way too early to just say, oh, this is a double top. This, we can't go higher. This has to be a short. I don't think we're quite there yet. There has to be a pretty damn good reason why I'm shorting a market that looks like this. The trend is your friend. Get out of the way of the trend. We're above all of the moving averages you can think of. We are above the cloud on every time frame you can think of. Let the trend happen. The long signal, the first one was at 28 based on the cloud. I told you to get out. at the bearish TK cross, and it's about to tell you to get back in with a bullish TK recross. And you might be thinking, well, this is super late up here, right? I can't get in. We're up 10%, whatever on the move. That's why we watched other stuff like chart patterns, which worked out beautifully. So the current support on this would be back to 43. It would be back to the daily Kijun. It would be back to the daily cloud. Again, that's the support I would want to buy. It also matches a cup and handle, which I'm about to talk about in a second here. But again, none of this is bearish on the daily. It is nowhere near bearish. Back to illustrating the strength of the oscillator. On the weekly, we love to live above 55, above 65, above 75, pre-halving, post-halving. Doesn't really matter. We have mostly gone up and to the right, so momentum should be overbought most of the time. So it's not yet enough to scare me out of position. Post-halving, just to compare 2017, we had tons of divs all over this, right? We get minor pullbacks, we keep going, minor pullbacks, we keep going. That's best case scenario post-halving. Pre-halving, we tend to have, a good little drive and then take our time until post-halving. The difference here being ETFs. Is it really different this time? I think it is. 500 million in a day inflows, that's a pretty big deal. If we continue to see inflows like that, price should go higher. That's what you expect to happen. I don't think it's some sort of magic wizardry that people are trying to hide. I mean, this is what you expect to happen. When nobody owns this asset and you have capital coming in, price should go higher. This was the inverted head and shoulders that broke out a couple days ago now. Perfect break at 43.3, on volume breakout, continuously higher highs, exactly the type of thing you want to see. You never want to see lower lows if you're expecting a breakout. The measured move on this from high to low, we've reached that and then some, right? So I took a little bit off earlier in this zone just because we hit the target. That doesn't mean, again, I don't think this is a short. I don't think this can't go higher. It's just on the near-term target. We did great, right? We did really, really good. And back in January 27th, I highlighted this. This isn't a flex. I'm not dunking on this guy, but I got a comment on Twitter that says a bit premature to call head and shoulders, right? And I said it was developing. I don't want to know when the tornado hits my house. I want to have a good idea based on some sort of predictable pattern system that's letting me know a little bit ahead of time. There's only so many things that can happen with price, really, right? Chart pattern wise, trend wise. There's some exotic stuff that tends to happen, but for the most part, it's generally the same over and over and over again. So if you can see that ahead of time and plan ahead of time, that can be super helpful, obviously. So, when I'm pointing stuff out, like in this video, I'm going to point out a few things, and it's going to sound like I'm saying, well, we can go up or down here. Not really, right? I'm just looking for specific breakpoints in price. I'm looking for specific failures or confirmations of moving higher. If we turn on the alligator fractal, that also held quite well on the 8-hour over the past week, continuously printing higher supports, was bullish the entire time. Again, telling you that there's a breakout potentially pending here above those resistance fractals. So currently the trailing stop loss on any long position would be 46.7. That would be the aggressive stop loss. And it actually wants you to add on anything above the recent high there. I think that's like 48.4 or something. So again, nothing here. There's no trend system that's going to tell you, get ready to short, guys, get ready to short. If we look at ways this could end, ways this could roll over, we are already at the top of a kind of year-long plus pitchfork here. Now, I've already added on wings to this thing, right? So it's already in overbought territory. It is semi-resembling a parabola, right? A super long, extended, who knows how high this goes. I don't know. We just saw one on Meta that was on a low time frame. This is a possibility, right? We could have some blow off top, pre-having, retrace to 40. I don't know, right? This isn't like what I'm expecting, but if I'm trying to map out possibilities, this is one of them. Sure. Legacy gets angry, dollar gets stronger. I don't know. Like there are ways that this could happen, but I'm not going to trade this until it breaks the parabola support, right? But I am cognizant that we are definitely leaning overbought on this high time frame pitchfork. Something that happened in 2017 is we spent 2 or 3 years in a pitchfork and then we blasted off, right? I don't think we're quite to that point in this trend. We could be. We certainly could be. All that's to say, I think it's more likely that we try to find resistance than just blast off, right? The difference maker is the ETFs. If we continue to see 500 million in daily flows, yeah, let's keep going. Something else to watch for here is not my favorite pattern, the megaphone. it always feels like a coin flip when it's forming. It feels like noise. It feels like random walk junk, turtle soup. You usually want to see several points hit on the diag, resistance diag support, which arguably we have. If this breaks out at 49.3 or whatever, random level this is up here, the measured move would basically be 56 to 60. Okay, so this is something to watch for. It's just hard because it's saying like even at highs, it's expecting higher highs. It's just a very awkward, for me, chart pattern. And we just had one of these in early 2023 that was probably more applicable. And we did eventually hit the measured move target. So I'm not going to say it's impossible. I think this one looked a little better than the current megaphone, but just something to consider, something to watch out for. I think a cup and handle is certainly possible here. What you'll read about cup and handles is they happen following a markup phase or following a bullish trend, which is what we've seen. You want a deep U-shaped pattern. This pattern invalidates if price now moves to the downside below 50%. So that would be, again, if it's in the cloud and below the Kijun, yeah, the trend is back to neutral. The higher the handle forms, usually the stronger the breakout. Something else you'll see in the readings. So as far as ways this could go, this is a way. The next place to trade this would either be to trade the daily Kijun on the cloud or to expect a breakout trade again around 48.5, basically back to horizontal resistance there. And if we go sideways for a week, which I don't think is going to happen, but if we do, the Kijun is going to slowly pick up a little bit, and that'll give you a higher support to watch for. So that's something to watch throughout the week. This is something on the low time frames. Again, I'm just always looking. I'm just, look, let's just go around the time frame, see what we see. There's a potential for a extremely low time frame head and shoulders, which would take you out of your trade based on that trailing stop loss. So, I think best case would be trigger the trailing stop loss, re-enter around 43. I just don't know if we're even bearish enough to roll over like that, just because legacy is screaming how it's screaming, but this is something to watch for throughout the week. As far as like tolerance above overbought, oversold, another way we can look at that is the weekly 20 moving average. Generally in any given trend, we like to live strictly above or below that. Since 28, we've been above the 20-week moving average. And at some point you get a little overextended. So pre-halving, we tend to live pretty close to the 20-week moving average. Generally a tolerance, let's call it 40% above the 20-week moving average. 2019 was a bit of an anomaly. And you can see after halving is when we turn on the real trend, right? So again, we're getting there to the point where you'd expect us to cool off a little bit. We certainly got there initially, but time can also burn this off. Time can bring up the moving average. So even based on distance from 20-week moving average, we're still doing okay. Moving into alts, most alts have not done so well on USD pairs. There's a few, someone's going to tell me, IMX or INJ or Link, right? I get it. Your bag that you're trading is doing great, but most of the alts have not done great at all. Solana's done okay. It does have this inverted head and shoulders pattern. The throwback to this would be about 102, 103. A stop loss for me, I'm in an active trade on this, would be around 93, 94. You don't want to make a lower low here. So I do like highs on any chart that looks like this. Here's Solana on the daily, also setting itself up for a bullish TK recross with price above cloud. That has an expectation of bullish continuation. AVAX similar. So if any chart that you're trading on the daily, on the USD pair, does not have a setup or a chart pattern, maybe you should focus on those. Not financial advice, but those are probably the better charts to be trading in the moment. Link's gone through full TK cross recross, moved to the measured move target based on the consolidation range. I think the weekly targets are like 25. So this still looks fine. No issues there whatsoever. Definitely one of the stronger alts. Quickly for legacy, DXY still looks like it wants to move higher. It certainly has a very strong case for an inverted head and shoulders. We are inversely correlated on the crypto side, on the risk side, to dollar strength. So we do not want to see this playing out. If for whatever reason, let's say CPI down means dollar down because rates down, right? Just spitballing here. I don't know what actually is going to happen, but if that happens, that should also help propel risk higher. So what we want to see this week is dollar back to 103. If dollar breaks 104.75, basically new highs, that's another potential stop loss for risk trades, right? Because that would mean Bitcoin, NVDA, alts maybe a little less attractive with dollar strength. So we definitely want that pattern to fail. On the S&P, I'm a little concerned that, yes, we're in price discovery, we're at all-time highs. That's great. It's pretty narrow. I don't really care about that. I'm more concerned about this rising wedge that's above a 45-degree angle that it looks like. Not quite a div here on high time frames, but the pattern to me, typically this ends in tears, even though people are going to tell you that rising wedges are bullish. Most of the time they are not. So maybe this has a blow off top to the target, but that would probably be another warning sign for Bitcoin if the S&P moves to like 5,400, 5,600, something crazy like that super quickly. That I think is another reason to maybe take some off the gas if you're on leverage. We have been fairly correlated with legacy, so it's definitely worth paying attention. And NVIDIA, I mean, what do you even say? There is maybe the starting idea of a bear div here up here. You can see again this RSI arc that we're trying to print. When you're ranging, you don't really have, you have a ranging RSI, right? So you don't really have that. If I were to dial this back a little bit, there was previously this bear div arc, right? So not quite there yet. But again, this could roll over at any moment for any reason. I don't know. I'm not going to short it. It's not shortable. It's in price discovery. It's in mania phases. But I think you do have to monitor that if you're trading crypto. Lastly, I'll just mention Coin. They have earnings this week in the weekly cloud. Looks okay. Where does this go in the cycle? I don't know. It's probably higher than here. So I think there's people sort of trading around levels on low time frames. There's people holding this for a year and seeing what happens. But I do think this leans very bullish. So this week I'd watch for CPI on Tuesday, which should come down on a month-over-month basis. That should bring rate probabilities for a cut higher. That should bring risk markets higher. And that should mean Bitcoin attempts moves higher. Something else to watch on the ETF side would just be what are flows looking like throughout the week. If flows are consistently 500 million, we're probably at 50K. If flows are diminished, we're probably still at 48, sort of struggling, making our decision whether or not we're going to retrace to 43. That's all for this one. Happy Super Bowl. Go Red Team. Like, dislike, comment, share, subscribe. And happy trading.